Hi, welcome to Smart Strategies for Business Owners. My name is Tony Rule. I'm a partner and director at TAG Financial Services. This webinar is for business owners and for people that help business owners. These include professional advisors, including bookkeepers, accountants, lawyers and the like. I hope you enjoy it. Please note the disclaimer. As any good presenter will tell you, there's always a disclaimer. Basically, we need to understand your situation before we can advise you on making the best of your situation. So that's really what this is saying. So St George Bank ran a survey a couple of years ago now, which basically looked at small business owners and determined what the likelihood of them succeeding would be. And what they found were these things. 55% of small business owners will retire poor. 74% of small business owners have no retirement plan. 54% of small business owners have no succession plan. 26% of small business owners will rely on the government pension. And 20% of small business owners hope to fund their retirement by the sale of their business. Now, with the amount of regulation, lodgement requirements, taxation implications, the employee and human resource requirements, why would anyone want to go into business? Now, don't just hope your business will be there for you at the end. The sale of the business at the end should be like the icing on the cake. You need to look for ways to make yourself redundant from the business. If you're the figurehead of the business, this can make it difficult to sell. Business owners need to find ways to take control and ensure that their career is successful. So your wealth focus. Your business needs to make contributions to your wealth over time. Don't plan on a payday at the end. So some key things are: pay yourself first, build the business to feed your wealth and retirement circles. So I'll talk about this a bit more in a minute. Always remember that cash is king, and make sure that you divest and diversify yourself away from the business. All right? Your business should be one source of income. Okay, so in looking at your wealth focus, here's a better way for the business owners to understand their plight. You need to consider your affairs in three connected circles: the business circle, the personal wealth circle, and the superannuation wealth circle. Your business circle should fund your personal wealth circle and your superannuation wealth circle through your journey, not just at the end. I love this image. Business is tough. You have to be brave and passionate to make it happen. It alarms me that so few business owners get out of their business what they truly desire. Being in business is like being in the jungle. It is survival of the fittest, and a business owner should be the king of the jungle. Why don't business owners get what they deserve? I think in the heat of the battle with competitors, with customers, with regulators, and even with employees, they forget what they desired. They forget what their goals and objectives are and just try to survive. Business is tough. Very few of us can say we do it for the fun of it. Why do we have the sleepless nights? Why do we deal with the tough issues? Why do we fix that customer matter? The usual reasons are to pay off the home loan, to put the kids through school, to be able to retire comfortably, or to make a difference. Like you, we're in business. We understand your concerns. We need to make sure that you can free up your cash flow. We need to pay off non-deductible debt as quickly as possible, and we need to create wealth to give yourself freedom in retirement. What we can do is take common business situations and turn them into wins for small business owners. Don't become a statistic. There is a piece of tax legislation that I actually love. This legislation represents a big win for small business owners. This legislation is called the Small Business CGT Concessions. And every business owner needs to be aware of how to take advantage of these concessions. Let's start with the overall concept. If you're an employee, your employer pays superannuation on your behalf all the way through your working life. So when you get to retirement age, you have a nest egg that you can then retire on. Now, some time ago, the government recognised that business owners often forego superannuation and put any spare money they have back into developing their business. So the government has introduced rules that allow the business assets that you have to be treated like your superannuation when they are sold. Now, as with most tax legislation, the devil is in the detail. But if you meet a number of conditions, you can enjoy the following benefits. Firstly, there's a 15-year exemption. So if you've been in business for more than 15 years and you are retiring, then when you sell a business asset, there is no capital gain on that sale. The three other concessions can be used where the 15-year exemption cannot be accessed. So firstly, there's a 50% active asset reduction. This simply halves the capital gain that you make when you sell an active asset in your business. The third item is the retirement exemption. This allows you to place excess funds into superannuation instead of paying capital gains tax. The fourth item is the rollover exemption. This gives you a 2-year deferral to allow you to get together the cash you may need to make a superannuation contribution or to pay the small balance of capital gains tax. Our first example is looking at how you can make your home loan tax deductible. So this example revolves around Cyril and Susie. Let's look at Cyril and Susie's three circles. Firstly, the business circle. Cyril and Susie own a business that's now currently worth $700,000. That business also has a debt of $100,000 and that business is trading profitably. In terms of their personal wealth circle, they have a home worth $1 million with a mortgage of $600,000 over the top of it, and the minimum repayments on that mortgage are $650 a week. In relation to their superannuation circle, Cyril and Susie have a combined member balance of $125,000. Cyril and Susie are drawing wages out of the business of $160,000 a year. Now this is allowing them to live, to enjoy a nice holiday once a year and to put their kids through school. They're also pulling a dividend of $42,600 out of the company annually, and this is to fund the mortgage over the home. Now, under this scenario, there's about $220,000 worth of income that's being shown in Cyril and Susie's personal tax returns. What we would do in this situation is we'd establish a family trust to own the shares in the company. We would be transferring the company shares that were held in Cyril and Susie's name to the family trust, and this would then create a loan from the family trust back to Cyril and Susie. Now, because the business is valued at $700,000, that would be the price that Cyril and Susie would sell the shares to the family trust for. Now, I don't want to get too complicated, but let's just apply the small business CGT concessions very quickly. The sale price is $700,000, which basically means there's a gain of $700,000. Applying the 50% general discount, this is available to all individuals, that gain reduces down to $350,000, and then we can apply the 50% active asset discount. Now, using the small business CGT concessions again, we can make a super contribution of $175,000 into super and not pay any capital gains tax, or Cyril and Susie could elect, if they chose to simply pay the tax on the $175,000, which would be about $67,000 in this situation. Now, note that the super contribution under the small business CGT concessions does not affect your concessional or non-concessional superannuation limits. Okay, so this is, if you like, a third way that you can get money into superannuation. Taking this situation a little bit further, we would then approach the bank and arrange for a deductible loan of $700,000 to be paid or provided to the family trust. The family trust would then pay Cyril and Susie that $700,000 in exchange for the shares that we spoke about just a moment ago. What this allows Cyril and Susie to do is to make the superannuation contribution of $175,000 into super. So this now takes their super balance up to $300,000, which is fantastic. The balance of that $700,000, which is $525,000, Cyril and Susie can apply that against their mortgage. So you can see there their mortgage has gone from $600,000 down to $75,000. The dividends from the company, instead of going to Cyril and Susie, will go to the family trust, and that's what will fund the loan with the bank up there. Here are the benefits of adopting this strategy. Firstly, there's about $26,000 worth of annual tax savings that can be achieved from day dot. Okay, and this highlights the importance of having your business structured the right way, and also too taking advantage of those small business CGT concessions. On top of that, we've also created a cost base for the business if it was to be sold to a third party in the future. Now, again, the small business CGT concessions may be able to be used in the future, but if they're not for some reason, we'll have saved about $130,000 worth of capital gains tax on a future sale of the business. So all round, that's a fantastic result. In our second scenario, let's look at a way where we can release cash into personal finances. In this example, we're talking with Kate and Jack. Jack is a director of a business. That business pays rent to premises that's owned by Kate. The premises cost $400,000 to acquire. There's currently an interest-only loan of $400,000 over that premises, and the current value of the property is $650,000. Kate and Jack have a home worth $1 million and a mortgage of $600,000 against that home, and they also have superannuation funds of $300,000. Okay, how can we improve this situation? Well, what we'd look at doing here is actually transferring the business premises into superannuation. Now, in order to do that, the superannuation fund would need to pay Kate $650,000. It's going to use its existing balance of $300,000 together with a loan from the bank of $350,000. With the funds that come from the super fund to Kate, Kate can pay off the old loan over the premises of $400,000, and she can pay $250,000 off the mortgage on the home. Now what we've got happening is that the business is now paying rent to the superannuation fund. The superannuation fund is paying interest to the bank on the $350,000 loan, and the mortgage that was $600,000 is now down to $350,000. Now, you'll be asking yourselves, okay, what's happened with the capital gains tax here, Tony? Okay, firstly, the sale price was $650,000, the cost base was $400,000, so there was a capital gain of $250,000. Kate was able to apply the 50% general discount, meaning that she could drop that $250,000 gain by $125,000 down to $125,000. That remaining gain can then have the 50% active asset discount applied, which gets it down to $62,500, leaving a net gain of $62,500, which could be contributed into super, or tax of $28,000 could be paid in that situation. Invariably, we recommend to clients that they make the superannuation contribution, and this is another way of taking funds out of the business circle and getting that into your superannuation wealth circle. So the benefits of this second example are that we've reduced the interest being paid on the home loan property, and we've reduced the home loan debt by $250,000. So in this situation, we're saving around about $15,000 per annum, plus we've got a higher balance in the superannuation fund, which means that you can earn more money in a lower tax environment and contribute to being able to retire successfully at the end of your career. Now, I just want to quickly cover the advantages of buying property in a self-managed superannuation fund. Firstly, when you hold an asset in your superannuation fund and you sell that asset for a capital gain, the maximum rate of tax on that capital gain is 10%. Now, even better, if you can wait until you get to retirement age and switch on a pension and then sell that asset, the capital gains tax rate drops to 0%. The second benefit we find with clients is that they get much more engaged with their superannuation. I've seen situations where clients are excited about writing out their rent cheque because it's going to their superannuation fund and helping to build their retirement wealth. So never underestimate that one. The third advantage is that the superannuation fund can use cash from other sources to reduce the debt. So if you're making concessional or non-concessional contributions to your super fund, these amounts can be used to pay down the debt. The fourth benefit is that the banks now offer offset facilities to allow you to accumulate cash in your superannuation fund, but at the same time reduce the interest that you're paying on your borrowing in super. The fifth benefit is good old negative gearing. So in the situation where your interests and property expenses happen to be more than the rent that you're paying, this can reduce the amount of tax that's being paid by the superannuation fund. The sixth benefit is that it gives business owners security and confidence. You can take a step now to secure your retirement in 10, 15, 20 years' time. That's a very powerful thing for business owners to do. So we see quite often that business owners become better business people because they know that they've made some smart decisions as they've gone along. The final point is it's possible for your superannuation to invest in your own business premises, and we can do this transfer in a number of situations stamp duty free. This is a benefit that depends on your situation, but we've certainly done that many, many times. Okay, so what do you do now? You've completed the first step, which is to listen to this information session, so well done. I hope you found it informative and interesting, and I hope it's opened your eyes as to what opportunities are available there for business owners. The second step is to organise a complimentary meeting. Now you can do this by either calling me or emailing me. Let me know that you've listened to this particular webinar. That's Business Strategies for Business Owners. And I will organise for you a complimentary meeting where we'll talk about your particular situation. The third step, should we proceed to that point, is that we will develop a plan for you. Now, we're only going to do this if we can add value to your situation, all right? So we're very conscious of making sure that we're not just doing things for doing things' sake. We want to make sure that we're adding value and getting the best possible result for our clients. Please, if you're not already on our mailing list, please visit our website at www.tagfinancial.com.au. There's plenty of great information there that you can take advantage of. And as I said before, please feel free to email me or to call me to discuss your particular situation. Hope you have a great day. Thank you very much.